So U.S. holiday tomorrow, stock and bond market going to be closed. They're going to close a bit earlier today. Maybe trading going to be a little bit lighter than anticipated, but that shouldn't take away from some impacting items on offer before, during, and after the holiday. Hello, everyone. Monty here, market analyst at IG UAE. And as always, let's go and get started and take a look at some of the recent items. Last Friday, I should say, we did get PC price index. These are the figures for the month of May. As always, it's always CPI that comes first, and then at the end of the month, you got PCE. So it's seen as a little bit delayed, but it is the Fed's preferred measure, and that means if they're watching it, we're definitely going to be taking a look at it as well. Month-on-month growth, 0.1% core. Month-on-month, 0.3% in line with estimates. I want to say that the headline reading of 0.1% lighter than anticipated. So too when it comes to the year-on-year headline figure, dropping 4.3 to 3.8%. A welcoming sight. Year-on-year core, though, as always, sticky problem child, dropping 4.7 from 4.7 to 4.6%. But all these figures either as anticipated or lighter, which in the current climate, better than anticipated. That's definitely something that we want to see. U of M's revised figures, by the way, sentiment, well, that was a plus that it was better than the preliminary figure at 64.4, but more importantly, consumer inflation expectation. It was nice to see that the preliminary readings, when it dropped the 12-month consumer inflation expectation to 3.3%, the 5-year dropping to 3%. That was definitely a welcoming sight, and it's even welcoming the fact that they managed to stick when it comes to the revised figures. So far, I want to say better than anticipated. So too when it came to last Thursday, first quarter GDP, 2% instead of 1.3%. And by the way, the Atlanta Fed's GDP now estimate for the second quarter was 1.9%, now 2.2%. So we did see cyclicals do quite well end of last week. There were some other reasons as well, with banking stocks doing better after the Fed's annual stress test, and then a lot of those financial heavyweights coming out and announcing dividends. But weekly claims, by the way, when it comes to the labor market, it was beneath estimates, better than expected in this case. 239 versus 265K, continues dropping to 1.74 million. Pretty much good data, we could say. I will say, though, there were some misses. We've got to go through that, right? We can't just paint one side of the picture. You got to show the whole story. Personal spending slightly beneath estimates, growing only 0.1% month on month. Pending home sales, no surprise, but it was worse than expected, down 2.7% month on month, and year on year 22%. Though that's not to take away from other strong points within the housing sector. We did get some other data prior that showed growth in certain aspects. Mortgage applications were also up week on week, and better when it comes to new home sales. Let's put it that way. Chicago PMI, by the way, very much sub 50, signifying contraction, and also missing estimates, even if it did improve to 41.5. So light red color there in terms of being a slight miss, whereas generally blue for the rest. And when it comes to the week ahead, we got manufacturing PMIs that are going to be releasing today. We got China's Caixin reading, by the way. That Caixin estimate is usually for export-oriented and smaller and mid firms, not like CFLP's estimate for larger firms last week, where manufacturing sub 50, and this is a story, by the way, globally, manufacturing in contraction, which means sub 50, services and expansion above 50, and that was the case for CFLP's readings for China. Caixin's estimate 50.5, so yeah, it managed to best estimates, but still, it's not the best reading but it is something that's seen as relatively positive, just because manufacturing makes up a much bigger chunk compared to the rest of the world of China's economy. Japan, sub 50, 49.8, only just. But Tenkin's Q2 figures for the second quarter, because for Japan and China, that was for the month of June. Tenkin's for the second quarter, it did beat for both manufacturing and non-manufacturing. Both of them were improving, and above zero, signifying improving conditions. For manufacturing, for the remainder of the day, we're going to get for the Eurozone, UK, as well as when it comes to the US. And the story, of course, sub 50 readings. And when it comes to the US, we're getting S&P Global as well as ISMs. But ISMs, both of them are expected to be below 50. But one thing you also want to note is new orders, just because of how bad the reading was last time around at 42.6, expected to go up above 44, but still remaining sub 50, remaining very well in contraction, not necessarily the kind of thing you want to see when it comes to the manufacturing sector, even if it does make up a smaller portion of the U.S. economy. Manufacturing was at 23%. Services is far more important, and that's going to be on Thursday for the U.S. For the Eurozone, UK, and Caixin for China, that's going to be on Wednesday. So just because of the holidays pushing out, U.S. holidays pushing out a lot of the data. So even API, the weekly oil inventory readings out of API and EA, that's pushed out a day to Wednesday and Thursday. And so when it comes to services, for the U.S., anticipated to be above 50, but here's the thing. S&P Global, healthier at 54.1, not so great when it comes to ISM. Last time around, it was only just in expansionary territory, and the expectation is that maybe improve a little bit to 50.5, but remaining near the border, not seen as a very much as a positive, especially given that services makes up 77%. So also want to take a look at the employment component, not just because it fell into contraction, but because it's going to be released on Thursday. There's going to be a lot of labor data at the end of this week. We got Friday's non-farm payrolls, where it's been a story of a string of consistent beats. The green number means that it doesn't mean that's positive. Of course, they're positive, but they were better than anticipated. And the expectation is that for the month of June, this is going to be releasing on Friday, 4:30 p.m. Dubai time, or our time out here, and the expectations we're looking at a roughly 200K plus figure. And this is all in light of what Fed Chairman Powell said last week, that there's more restriction, monetary tightening coming due to a very strong labor market. So whether or not this is, it's down to, we got PMIs and then we got the employment, the labor market, to see whether or not it's going to test the Fed's narrative. And afterwards, of course, we're going to get CPI, but that's not this week, so we don't have to worry about it this week. And when it comes to the remaining items that's going to be on offer, unemployment expected at or near 3.7%. You got wage growth, month-on-month growth again, 0.3%. And then because of the holidays, we're getting things pushed out. Job openings expected on Thursday, anticipated to fall back below 10 million. ADP's non-farm estimate, that's expected to be roughly 200K, potentially sub 200K, depending on which estimate you're looking at. Challenges, job cuts, and then unemployment claims expected to tick back up. So PMIs, NFP, and then afterwards when it comes to central bank, no decisions. When it comes to the Fed, we already had their decision, but now it's time to get the minutes. So the minutes is going to be released Wednesday night, our time, that is out here in Dubai. And amongst the majors, there's only one central bank that's actually going to be releasing its monetary policy, and that's the Reserve Bank of Australia. Tomorrow morning, they did hike last time around. It was a surprise. Of course, they mentioned that it was a finely balanced decision to avoid inflation getting entrenched. But what I'm going to do is I'm going to go pull up IG's trading platform, taking a look here at AUD USD. This is a daily chart. And what I've done is I put the arrow as well as a text of what happened to sort of give us an idea of how AUD USD's price has gotten to where it is today. So back in their meet on Tuesday, June 6th, you had the surprise that the rate hike to 4.1%, and you had afterwards mid-June, this was June 15th, you had stronger than expected labor data, much healthier than expected. The unemployment rate dropped to 3.6%, and that, of course, is going to raise the odds. People are thinking, oh, that means there's going to be another rate hike, so on and so forth. But then they came out with their minutes from the meeting. The RBA released their minutes, and that was on June 20th, and it came out dovish in the sense that because it was a finely balanced decision, people went, oh, okay, that means that that the likelihood started to drop in terms of seeing these getting the sort of hawkish moves out of the RBA. And then afterwards, the latest significant item, there's been plenty in between, but the latest significant item out of Australia was you had CPI. This was last Wednesday, June 28th. CPI dropped from 6.8, not to the anticipated 6.1, but to 5.6%. And looking in terms of what the forecasts are, it seems like amongst the forecasts and the pollsters, it's a finely balanced decision in terms of whether or not it's going to be on hold or whether or not we're going to go ahead and get a rate hike. And by the way, just in case for those of you want to get this information and a whole lot more, Week Ahead has got, this is on page 2, this is the weekly market report released every Monday, the daily is Tuesday through Thursday. The link of this, if you want this report, it's in the description of the YouTube video, but it also includes AUD/USD, where I got to point out, technicals aren't going to matter as much in the face of a fundamental event. But going into that event, assuming this retail sentiment holds by the time we get into tomorrow morning, but it's a majority by 56%. COT speculators still heavy sell when it comes to the Australian dollar, but they did pull back from 68 to 65%. And well, that's about it from our end. I want to thank you guys so much for watching. Good luck out there this week with all that's at stake. And as always, happy ticks.